but liquidity is the big daddy here. I got caught out by this in 2017. By about April or May, I sold out of my Bitcoin. I was up 10x because I bought it at 200. It was trading at 2,000. I'm like, it's a pretty good trade. I took the money off the table. It consolidated for a little bit. Then it went up another 10x into the end of the year. People can't understand this. It's like, if Bitcoin went up 10x from here, we're at $1 million. Now, I'm not expecting a 10x, but what I'm saying is people did the same thing then. And what happens is you sell out positions, the market corrects, and because liquidity is still the driver, everybody gets forced back into their positions, and that creates this violent end-of-year move. That's possible. I'm not saying it's definite, but I think of improbabilities, and that's where my head's at.
The crypto market moves in fast, high-velocity cycles of creative destruction. When assets crash by 95%, the key is identifying which ones have strong network effects and real utility. Many chains die off because they were artificially propped up by funding, but winners like Ethereum, ETH, and Solana, Sol, emerge with strong communities, developer activity, and real-world use. Solana, in particular, has demonstrated resilience and innovation, making it a top-performing blockchain. It is expected to outperform Bitcoin and Ethereum due to its rapid development, DeFi ecosystem, and on-chain activity. Meanwhile, Ethereum, though still dominant, is struggling because its Layer 2 scaling solutions have led to overbuilt capacity, resulting in reduced mainnet activity. Despite this, Ethereum remains the most secure and trusted platform for institutional finance, making it the likely choice for large-scale tokenization of financial assets. While Solana may be leading in innovation and efficiency, Ethereum remains the Microsoft of blockchains, the safe and reliable choice for enterprises. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio, and get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains on-chain data, forecasts and expert predictions. All of this is available free of charge. It only takes a moment to sign up and you can always change your mind later. Now back over to Raoul Pal.
Fast, super high velocity, creative destruction cycle. You don't know what's going to be really valuable until the bottom of the cycle. The things that survive become the best trades. Solana, Ethereum. So Ethereum in 2019, absolute killer trade. 2018, Solana in 2022, absolute killer. So what you need to see is when those things go down 95%, everything goes down 95%. So now you've got all of these things at a discount. Your job is to find out what really has network effects, what is really powering an ecosystem. And what you'll find is a bunch of these are kind of dead chains, because they were just using money from the foundation to pay for economic activity. But then you looked at Solana and there was a ton of developers building. The community was like focused. Tolly was a good leader. You're like, okay, there's signal here. So I like the cyclicality where you wash out all the bad ideas. People are testing innovation. And that's good, right? It's a lot of innovation. You do VC, tons of VC things go to zero. But if you get the right ones, they don't. You can make a lot of money out of them. Immensely bullish on Solana. I think they have the right activity, the right pace of innovation. They're good, do good stuff. There is, so much activity on chain because of meme coins, but there's also stable coins and DeFi and all of the things that are required to build a great blockchain ecosystem. So I think Solana outperforms Bitcoin. Outperforms Bitcoin and ETH as well. ETH is struggling, and ETH is struggling not because ETH is bad. Yes, it's lost a bit of direction, but the reality is they overbuilt capacity by all of the layer 2s. Mm-hmm. Right? Anybody can spin up a layer 2, so you're building endless capacity, and it only uses a small amount on the actual Ethereum mainnet. So what they've built is this gigantic architecture that's suitable for the entire finance system at scale, but we don't have that use case. So what you're seeing is it's just not generating enough activity on the base chain, and that's why it's dragging. My guess is if you are Goldman Sachs or JP Morgan or whoever, and you want to tokenize assets, tokenize equity markets, tokenize all of the finance stuff, lending markets, you're going to do it on ETH. ETH is like the Microsoft of blockchains. It's the one you won't get fired for. It's the one that has the highest level of security, the deepest developer ecosystem, the largest amounts of interoperability, the largest amounts of applications. There's no reason the finance system will build at scale on any other chain yet. Let's say some young kid has made $100 million. That story's typical in crypto, bizarrely, What do? You buy yourself a house. Maybe you buy another house. Okay, what do you do with the rest of your money? You'll keep it in the casino, but in the end, all rich people end up buying art. All of them. Every billionaire in the world buys art because why? You can't have 50 properties. It's a pain in the arse. But you can have 50 Van Goghs. So it becomes a storage for vast amounts of wealth, and you get to flex it. Look at how rich I am. In my $50 million apartment, I've got $100 million of art. That's what happens. So it has always, for centuries, been a store of value for wealth. Yeah, but what you get that people forget with NFTs, so dick butts have gone from 0.3 ETH and they hit 1.5 ETH recently. That's 5x, right?
They're more. They're 2 point whatever.
Yeah, okay. And
floor price 1 ETH.
And ETH has gone up 30%. So you get, let's say ETH doubles from here. And those things go up 10x in ETH terms. That's a 20x. Okay. That's because they're priced in ETH. People don't understand this. Their compounding power of returns is massive. And they're still cheap.
Yeah, I'm just looking at crypto price. But one thing you do see is that the price, it doesn't always correlate. So if ETH picks up, you see the floor go down as well in ETH terms. Not sure if we're seeing that now.
You can do. I think over time, generally, forget the day-to-day correlation. Over time, if the people like the project, the ETH price goes up. If ETH goes up a lot, yeah, it starts to become in dollar terms too much. But generally speaking, you still get the multiplier effect. So, punks, I think punks go to, let's say, 100 ETH. And ETH goes to 10,000. That's a shit ton of return.
That's a few assets, yeah.
It's all bullshit. The VC model is you or any VC is taking a lot of risk to put some capital in a project that will probably go to zero. Great. Then the unlock comes out and you want to be able to sell some because you've taken risk and you will get rewarded for that. Is there sometimes too large an unlock at one particular point and they don't manage it? Sure. Does the VC play an important role in the space? Without question. Because if not, people can't raise capital. Until you go to the new meme fair launch. What is a fair launch? It just turns us lot into a bunch of VCs and we dump on them. It's the same fucking dumping, just different people. So it's utter bullshit that it makes a better market. It just means that somebody else gets the ability to dump.
Thanks for watching. Don't forget to subscribe to access my free daily crypto updates and expert predictions direct to your inbox.